It's your boy, Young Equity Chris.
It's your boy, Young Equity Devin. Let's get it.
All right, today we're going to be talking to you about this stock, Lemonade, ticker symbol LMND. At the time of this recording, it's trading about $87.20. Just a little bit of information about this stock. This is a stock that, saw the best of its games during the illness. It got as high as $188.30 a share, but now it's all the way down to $87.27 a share. And the past month is down a whole 18%. So we'll be talking a little bit about the company and whether it's worth investing in now.
Yeah, man. So as of right now, let's take a look at the financials, right? So right now, net income for 2020 was a negative 122 million. So not too hot with the net income there. Total revenue was 94 million, which is a substantial increase from 2019. So that's pretty good there. Balance sheet is looking great. Okay, for 2019, you had 414 million in assets, and then 116 million in total liabilities. So that's a pretty good ratio right there. But then in 2020, they actually increased their assets to 828 million, almost $1 billion in assets. That's really good. And I know they have a lot of cash on hand, right? And then the liabilities are sitting at 287. So not too bad. That's a really good ratio, right? That's typically where you want to be at if you own a company or even have personal finances. As of right now, operating income is negative 91.7 million. But who hasn't had a downfall in situations like the illness, right?
Yeah, no, that definitely makes sense. But to talk a little bit about what Lemonade does as a company, they're an insurance company, right? They're not selling you juice like you thought because of the title. I mean, I thought this was some, the little girls has a lemonade stand. I thought she went public, but no, it's an insurance company. They offer homeowners, renters, pet insurance, whole life and term life insurance. And pretty soon they're going to be offering car insurance. So this is how they get their money. They pride themselves on a flat fee basis company. So they claim that they're not in competition with you and trying to unnecessarily raise your rates because they charge a flat fee no matter what. And also, they, at the end of the year, if you don't cost them more than your premiums, they get 40% back to charity of your choice that they have available on their website.
Oh man, that's pretty dope. I mean, one of the things that I feel like is pretty cool with this service, right, is the life insurance, right? So starting at $9, just $9 a month, I'm assuming based on the type of term you get, whether it be whole life or 15 to 30 year, or how old you are. And also they don't require a medical exam. When I had I had to get a whole physical. When I got the life insurance, somebody came to the house, whatever, drew the blood, did all that. It was kind of awkward. It was a weird situation. They wanted to make sure you weren't on drugs, all kinds of things. So for the fact that Lemonade can actually streamline that process, it puts a lot of people in a better position to where if someone passes away in the family, you can get money and reap the benefits of somebody putting that in place for you.
Yeah, man, that's pretty good stuff. I had the same experience when I got my life insurance. They came and did a physical and whatnot. So yeah, $9 a month, you can't beat it. And I personally think everybody should have life insurance. I don't believe in whole life insurance because it's overpriced. If you're getting it at a young age and you're paying thousands a year on it, it's just a waste of money because you can get Lemonade for under $120 a year. So that's pretty much all I have to say about that. Would I invest in this company? Invest insurance companies really isn't my thing. I know they've tried to pride themselves in being a tech company too, using their software and algorithms to identify the risk of every person that is applying for insurance. But at the end of the day, they're an insurance company, and their net losses will tend to skew bigger than what you will find in a traditional tech company. So maybe I won't invest in it, but if the stock goes around $60 a share, it might be worth looking at.
Yeah, man, for sure. I mean, I think it's a strong buy for me, right? I'm looking at some of the analysts and they're saying it's a hold right now because clearly some people probably bought it at, $150 and now it's trading at $87. I say it's a good buy at either $60 to $75 because there's a chance for it to either 2 or 3x back to that 52-week high. I think it's a great product. It's anything that pretty much disrupts an industry is going to be something that I'm looking forward to, so you can invest in the long term. And looking at the financials, they're doing better with their beating their earnings reports and coming out with better financials. So I think that definitely definitely it's a buy for me. If you already have it, it's a hold.
Okay. Well, with that said, again, I'm not a financial advisor.
And I'm not an expert.
Thank you guys for checking us out. It's Young Equity Chris.
It's your boy Young Equity Devin. Let's get it.
Yes, sir.
Still can't stop it. Grow. Still can't stop it.